Good day, grade 12 learners. Welcome to today's business studies lesson. My name is Tsidi Sotlaka. We'll be looking into a topic we call the investment securities. The focus will be on investment and the returns. This should be very interesting. Did you know a good credit score is a great source of investment because it would help you to acquire capital from financial institutions such as banks. So this would allow one to have access to capital because a good credit score would allow them to have money. So basically, a good credit score should be considered to be an investment. So today's lesson will be on investment securities and we'll be looking into the following. Let us look into our objectives. We will look at the following. At the end of this lesson, you should be able to outline or discuss the following factors that should be considered when making an investment decision. You should be able to consider return on investment. You should further be able to look into the risk and also look into a factor we call investment term or period, to say how long do you want to invest. Then we should also look into the inflation rate to say how can the inflation rate now affect your investment. Then you should also look into taxation to say how can tax affect the investment you have made. And then we'll also look into liquidity, which focuses now on the rate at which you can convert your investment into cash. Then we will also look into the following. By the end of this lesson, you should further be able to explain the functions of the Johannesburg Security Exchange, which is what we call the JSE. Then you should also be able to discuss various types of investment opportunities. Then be able to explain the risk factors for each type of investment opportunity that you shall have discussed, as we said. And then we will look into our lesson, and the structure of our lesson or the direction of our lesson will be in this manner. We will start by looking to factors that should be considered when making an investment decision, to say what should you think about, what should you look into before you can invest. We will then look into the functions of JSE. Then the last part of our lesson will be looking into the investment opportunities and their risks, to say what is the risk in investing in each opportunity that we will discuss. Pre-knowledge. You know, or you must be knowing, the different sources of acquiring capital, such as bank loans, asset-based loans, government grants, and bank overdrafts. All those are considered to be now sources of finance. And one thing you should know is that when you start a business, you are basically investing because you expect a return after you have started that business. And that return should be capital. So how you get capital is also a source of investment, as we said when we looked into our did you know fact. Then, pre-knowledge practice, we have Thabo, who went to Pretoria Bank to apply to get cash using his business plan. This source of capital is known as it known as a bank overdraft? Is it known as a grant? Is it known as a bank loan? Or is it known as an asset-based loan? The answer here should be bank loan, because with a bank loan, we are talking about acquiring money from the bank. But asset-based cannot be the answer, because here we are talking about acquiring a loan for an asset. But Thabo here is acquiring a loan so that he can be able to start a business. So the correct answer is supposed to be a bank loan. New words. For this terminology, or for this lesson, you should be able to know the term investment, which refers to investing or saving money in order to yield a better return. Then you should also be able to know the Johannesburg Security Exchange, or the JSE, which refers to a formal market where trading in shares and comprising of all public companies that have been listed would be happening. So this is a market where shares will be sold, especially for publicly listed companies. And then risk. Risk refers to the chance that the invested amount may reduce in value or be lost in total over a period of time due to unforeseen circumstances. That is what we mean with the term risk. So with that being said, let us take a short break, then we'll start with the main part of our lesson.